All right, guys. Well, let's go ahead and get this show on the road. Happy Monday after the Super Bowl. Curious to see how many people call in sick from work today. Today tends to be one of the least productive days in America. Day after Thanksgiving and day after the Super Bowl. Statistically speaking, I think are two of like the top five. Um, so, uh, got a lot of data to share with you guys today. If you saw the calendar invite or text or email or whatever we posted, we kind of talked about volatility. And so um, there's some economic reports being released this week that'll be market moving. We'll talk about that a little bit. But the last week or so, we've seen incredible volatility in the markets, and volatility tends to bring lots of concern and fear. It also brings opportunity if you can keep yourself from getting emotional and charged up over volatility. So I'm going to share a little bit of what's going on. A lot of this isn't really data that I would say you guys want to grab these from us and make shareable. It's more for kind of internal knowledge of what's happening in the markets and how people might be reacting to that. Um, would love to get some feedback on kind of some of your opinions after I share what I'm going to show you guys here in a second as well. So we'll try to make this interactive as much as we can. So with that, let me jump in here. All right, so um, I will freely admit that I do not understand crypto. Um, I bought some crypto a couple years ago and it didn't really do anything, and I sold it because I was like, I don't even know what the heck this stuff is. And I think a lot of people are probably in that same bucket. Some people have probably made some money on crypto and still don't know what the heck it is. But there are a few that really understand it. And so the crypto market has been very, very volatile, which is not unexpected because anytime there's an emerging market, like um, a company blows up and expands after its IPO and it's like the new hot thing, you'd expect some volatility. There's not a long track record. A company like Microsoft or Coca-Cola, blue chip stocks are probably a little bit more stable because they've been around so long. Microsoft may be a little bit different because it's still very tech forward, but Bitcoin's very volatile. And Bitcoin was over $100,000 per coin and had a big sell off in the last couple of weeks. And so the chart I'm sharing here is the Bitcoin sell off. Um, and cryptocurrencies as a whole, which is this next chart, have lost a couple $1 trillion of market cap. And so if you take Bitcoin and Ethereum and all the other cryptocurrencies, um, the market cap of all of those October 6th, if you can see this, was $4.3 trillion. Big sell off in the crypto space in the last couple months. As of end of last week, the market cap was down $2 trillion, and it was about $2.3 trillion of overall market cap. So close to a 50% sell off in that period of time. Um, do you think a smart investor who understands it and has the right risk threshold, do you think crypto would be a good investment to get into like today, right now, based upon the track record of what you've seen for the past few months here in this chart? Okay.
Yes, buy an
Yes, right.
opportunity.
Probably yes, right? Buy an opportunity. It's really cheap, right? But who do you think is going to buy crypto right now? Savvy, experienced institutional investors or retail investors that don't understand it, that act a little bit more emotionally? Okay, who do you think is going to buy crypto at this bottom after this big sell-off? Like
The
the
knowledgeable investor.
right, knowledgeable, yeah. So knowledgeable investor, people that understand that, and they probably already are in crypto very heavy, so they've probably gotten hammered with the value of their accounts going down, and they're still going to buy more. And why should they buy more right now? Because they've already taken a loss, and that's kind of what you call like dollar cost averaging, which is basically buying an investment at various phases, but buying an investment that you believe in when the value has come down, whether that's crypto, stocks, or real estate. And so I think crypto is probably a pretty good buy right now. And I'm not recommending that. And I don't own it. I don't understand it very well. but just looking at the charts and seeing how much it's come down, probably a good opportunity, right? Just like real estate, right? A lot of people are out of real estate today, and because things are softer, that's actually the time to get in and purchase that asset is when the price is down. So anyway, that was really interesting. Um, the economic news of the week this week. So last Friday, we were supposed to get a monthly jobs report. They released it, or they postponed it to this Wednesday. Um, so Wednesday of this week is the January jobs report. Not really sure why they postponed it. I'm not sure if the reasons why they postponed it is really stuff that's that accurate. The government shutdown has been over, but it's kind of still somewhat government shutdown related, I guess. Um, we did get some private information on payrolls last week, and so there's three charts. Revilio is kind of a private entity that pulls some jobs data from various persons. And you can just see from 2021, kind of post-COVID economic recovery, what the jobs market has been the last couple of years. Okay, so shrinking job growth, and then in certain periods of time, job contraction, like we've actually had losses. And so Revilio is projecting a loss of 13,000 jobs in January. Um, Linked Up, another service, they project it and then they give a forecast and they compare that to the real numbers. And you can just see kind of a similar trend here, right? Trend is coming down. Linked Up is projecting job losses in January. So again, that Wednesday jobs report we get. And then ADP, the big, huge national private payroll service provider. Many of you have probably worked in a job where ADP was your payroll provider. And ADP also has a report, and then you can see since 2021 and how those have trended lower. What was interesting with ADP is they were actually showing job losses for a couple years here, so not really a new trend for them. They were showing job losses, and if you remember, like in 2024, really 23, 24, a little bit in 2025, the headline, like BLS, Bureau of Labor Statistics numbers, were always coming in higher than expectations, and then they kept revising them lower and lower and lower, and the numbers really weren't real. Like whatever the numbers they were posting were always overstated, and so ADP was a little bit ahead of the
I'm not
curve.
getting up to
Um,
recast.
they were a little bit ahead of the curve with that, and so ADP is projecting job losses, and so on Wednesday, what are we going to get? A jobs report. Will it probably be weak? I would expect so. That's the trend direction that we've been seeing. If we get a jobs report on Wednesday that kind of follows with some of these weaker projected employment reports, what do you think will happen to mortgage rates? Do you think mortgage rates will go up or go down? Okay, probably going to go down. Okay, so probably a good day this week on Wednesday for interest rates, and probably a good week overall, I would expect. Okay, so outside of all that doom and gloom, right? We've got Bitcoin selling off, we've got crypto as a whole, going down. We've got all these weak jobs numbers, job openings. So this is kind of a measure of how many job postings are there online on like Indeed or LinkedIn, things like that. Sure. How many announced hires have publicly traded companies made, um, compared to the number of people filing for unemployment? And there's 0.87 jobs posted for every person who's unemployed. And so if you step back and think about that, if I'm unemployed and there's only 0.87 jobs posted available for every unemployed person, that's a sign of weakness, right? And you can see kind of pre and post financial crisis, you had very few job postings. It kind of surged, post COVID. And then, you can see the job postings are trending down, right? So all of this is kind of bad economic news, especially on the job front, that's been trending that direction over the past couple years. But at the same time, this is called the bull and bear indicator. And basically, if you guys know what a bull and bear is, a bull or being bullish means I have a positive outlook on what the stock market's going to do. So if we're in a bull market, or if the market's bullish, you would think that the value of the stock market's going up, right? If things are bearish or we're in a bear market, then people think the stock market's going to sell off or go down. So Merrill Lynch, huge investment banker. Their logo is a bull. If you've ever been in New York City and you've seen the bull near Wall Street, anybody ever seen that near in the financial district of New York City? So the bull is kind of a symbol for a good market. My mother-in-law is a financial advisor, and she has a big like picture of a bull in her office. Like that's like her main piece of artwork behind her desk is a big old bull, and people know what that is. And so, despite all this doom and gloom, um, the bull bear indicator at like January 2026 is about as high as it's been going back 23 years, like kind of post September 11th, like 2002. And so it's like, okay, well, something isn't making sense, right? We have weak employment data and we have crypto selling off, but we have people that are investors that are very bullish. Okay. And so why do you think that is? Um, I think there's a couple reasons. I think a big piece of that is AI, right? And so we've talked on this call a bunch that what do we think is going to happen to um, unemployment rate in the future based upon AI and the growth of AI. I would expect it's going to go down. Um, Last week, so Casey McElroy, who's on our team, runs a branch with Aaron. He sent us all an email, and he was doing a refi for a client and trying to figure out what the house is going to appraise for because we need it to appraise at a certain number for it to make sense for this customer to refinance. And Casey, you want to tell everybody um, like what tool you used to find comps and how long it took you?
The tools, it's little known. It's called a Chat GPT. And you pretty much, give it as much information as possible or what you're kind of looking for, or asking if it's reasonable for this home to be valued in this range, and to provide a CMA. And it gave more than enough information, but very good information.
Did it take you like 3 to 5 minutes to kind of prompt it and tell it what you needed, maybe?
Yeah, if that.
Um, so so we're not realtors, so we don't have the same access that you guys do. For us to like accurately pull comps and do what ChatGPT did for Casey within minutes could have taken 15 minutes to an hour. Like I actually sent it to Paul, our who runs our operations, because I said this is something we'll use if we ever have to appeal an appraisal. Like if an appraised value comes in low, us trying to find comps takes, you know, 15 minutes to an hour. Chat GPT literally did it in 3 to 5 minutes. So that's really cool, right? But what does that come at the expense of? And not necessarily searching comps and what Casey did, but look at all the other ways people use AI right now. Um, Many of those functions would have been done by a human in the past, and or with AI type tools, maybe you don't need 10 people to do the same job. Maybe you need 6 people or 7 people or 8 people with AI. It's probably not 10, right? And so there's sectors that AI will impact more than others that will have job growth weakness, I think, for a long time. And so we've kind of talked about this trend for a while, but I saw these charts and I was thinking to myself, like, how do we have a bull bear ratio where people are super bullish on the stock market, yet at the same time, we have terrible trends of job and employment growth going back many, many, many years. And some of those job trends were kind of the post-COVID recovery 22, 23, 24, when things were kind of naturally slowing and inflation was high. But inflation's low, right? That post-COVID kind of weak market's pretty much over, and the job market's still pretty weak. And so I think that it's just really important, one, for all of us to adapt and embrace some of these tools because they can create massive efficiencies for us. But two, know that you're probably going to see a period over the next number of years of higher unemployment. And so, what does that mean for mortgage rates? Probably good. But at the same time, what does that mean for our buyer pool, especially younger, right? Like younger, less qualified, less experienced buyers. probably bad, probably fewer of them, probably more fear. And so when I look at this bull bear indicator, like who do you think is up here? Okay, older, more established, with more money, right? And it's we've talked about this. There's like two different economies happening right now. People that have assets are really taking advantage because assets have been on a really good run higher, with the stock market's been booming for years. But on the other side, lower income, younger, less job experience, right? Completely different world for them. Um, and that's one of the reasons why like the first time home buyer age has increased, to 40 years old. And I'm not sure if there's any government policy that can really change that other than time, right? The economy is going to have to absorb this AI wave, create new types of employment. Inflation will have to stay low for that younger generation, that younger first-time homebuyer, to be able to afford something. And so I would think that in other markets, you might have like so in Orlando where I'm at, I think our average loan amount's like 350 to 400,000. So like under 350 is probably your first time home buyer range. And in the past, those were the houses that you might see selling fast for multiple offers, and maybe more expensive homes might take longer to sell. It feels like there's a little bit of a flip-flopping going on right now where the lower price stuff may not sell as fast because the people that would buy those homes aren't quite ready or qualified or feeling secure in purchasing a home, where like the higher price stuff in some markets seems to be moving a little bit faster because those buyers feel more secure, more stable, more ready to pull the trigger because they know there's opportunities in today's market. So, just kind of fascinating how things are so different, and how you can tie them all together.
Mike,
Um,
my,
Hello?
yeah, I was just questioning. I wonder, what I would like to see is the impact of what that drop in the Bitcoin, how that might relate to the increase in the dollar or the increase in the market from a monetary standpoint, if it's where that money's flowing, because it's going somewhere, and that might be causing those two to increase. Don't know, but it would be an
Yeah.
interesting.
Yeah, that's kind of a thought I had too. Like if money flows out of Bitcoin, where's that money going? Because we've talked on this call before that people have choices where to invest their money, whether that's stocks, bonds, real estate, alternative investments like Bitcoin. And if the stock market's booming, people are less likely to take the money out of the stock market and invest it in other places like real estate. So I think Bitcoin, having some weakness could have an impact on like do those people, like I've had a couple clients that didn't want to sell their crypto to put a down payment on a house because I had this one guy a couple years ago. He's like, my Bitcoin's doubling every 3 seconds. Not exactly that, but like this guy thought this Bitcoin was going to continue on this massive run higher. And he's like, I'm not going to pull money out of Bitcoin and buy real estate because my Bitcoin's been on fire and it's been increasing like at a rapid pace. So maybe I'm not sure. It'll be interesting to see what happens there. I think that the people that are in crypto seem to be pretty committed to crypto and believe in it. And I don't think many of them will shift their focus. I think they'll just use the opportunity of it going down to buy more. But yeah, some of your smaller time investors might be like, I'm done with this. It's too volatile. I'm going to park my money somewhere else. And maybe that brings some opportunities for real estate. It's hard to say. Um, okay, let me pull the charts up real quick. So just to give you an idea of what we've got going on this week. So we do have a couple of big economic reports for you guys to watch. That jobs report we mentioned that was supposed to be last Friday is delayed to this Wednesday. So unemployment rate, average hourly earnings, non-farm payrolls, all these right here. That's the jobs report. So tune in Wednesday morning, at 8:30 for the release of that. And then we get kind of a back to back this week. So we get that, and then we get the consumer price index, which is kind of the second most important inflation measure. And that's a big headline number. And that comes out Friday. So we expect a little bit of volatility this week, but volatility probably in a positive manner for interest rates and inflation, because I think you're going to get a weak jobs report. I think you're going to get tame inflation. Those two tend to kind of, go in tandem. But that's what I would expect to happen this week is weak jobs, cooling inflation, all that's probably good for mortgage rates. The only thing that could really change that would be geopolitical events. So tensions between us and Iran, what happens there? Does that affect the price of oil? Could that cause oil prices to spike and that would cause mortgage rates to go up? So that could kind of dwarf what happens with the jobs report. Um, the trend direction that we're in is still very positive. The mortgage bond market continues to move higher. All of these lines here, this purple line, it's the 100-day moving average, continue moving higher. Even though, there's been a few things in the past few weeks that would typically cause the market to sell off. We've stabilized and the bond market's been pretty positive. So I think that trend's probably going to continue, but that trend of mortgage rates is probably very flat and sideways, more so than down. Like maybe like 75% flat, 25% rates moving lower. So I would say rates are still moving lower, but at a very, very, very slow pace, but still in a positive direction, generally speaking, overall, just, not a significant movement lower, but kind of mostly flat, slightly lower. Don't really see anything that would cause concern for us to think mortgage rates are going to move higher. But think we're going to see rates continue on the same trend that they've been in. But the two big events this week, Wednesday and Friday, will certainly be market movers. And then we do have a Fed meeting coming up in March, so we're a little ways out from that. But we talked last week about President Trump has nominated a new Fed chair. So what the Fed does next month and in April, kind of insignificant because there's a new Fed chair. And so even though the Fed meets twice before the new Fed chair will be installed in May, before the June meeting, the Fed's meetings the next two times, March and April, kind of not significant because the new Fed chair, his comments, what policies he will implement will probably move the markets overall. Before we let you guys jump off today, so we've talked about a couple events that we've got coming up, and I just wanted to give you guys a couple of dates to remember. Tom Ferry, #1 real estate trainer in the country, will be in Orlando. I know many of you in Central Florida are planning to attend that event. If you guys have not registered, get with whoever you work with on our team. It's next Thursday, the 19th. And Brent or Corey, are you guys on? Because I think the date for South Florida and Miami just got released. I believe it's in March or April, but do you guys know that date yet? And if you don't, I know we'll get some invitations out.
I put it on my calendar and I have it in my email. I can look it up real quick.
Okay, cool. All right.
I think it's the 23rd and 24th
Of March, Donna?
of March. Yeah.
Okay, perfect. Okay. So if you're in South Florida, be on the lookout. We'll get some invites out because that date now is live. But if you're in Central Florida, it's next Thursday. So make sure you get with us, get the registration link. It's free. We have unlimited tickets. We're sponsoring the whole event. I think there's like 500 people registered right now. So it should be a big crowd and a fun event. We are also doing two events this month and different dates in different markets. But if you have clients that are potential move-up buyers, okay, so buying a new home, oftentimes they are doing that before they sell their existing to avoid a contingent offer. And doing so, there's typically two challenges. Do they have cash to put down before they sell their existing house? Or do they have the income to qualify to buy a new house without selling their existing? Sometimes the challenge is both. Sometimes it's lack of cash and income. We have solutions for all of that. If someone has a lack of cash, we can do home equity lines or bridge loans against their existing property. If it's income, there's multiple programs. We have an in-house portfolio program that lets you buy before you sell and not hit you for both house payments. And we can do both. So just keep that in mind that if you have clients that are kind of in that market where they might want to be a move-up buyer, or it could be an out-of-town relocation, like we had a client in town last week from Ohio buying in Florida, but before they sell their house in Ohio. So could even be an out-of-town relocation. But if you have someone that wants to buy before they sell their current home, we're going to do some classes on that in different dates and in different markets. So be on the lookout for that. I think that's a really powerful tool that will let buyers kind of take advantage of good prices. And the feedback we get from a lot of realtors is sometimes it's actually easier to sell the house when they've moved out because it's vacant. And whether that's having pets or kids or a lot of clutter, sometimes a vacant house might be easier to sell in some cases. So just be on the lookout for that. With that, guys, have a great day. Have a great week. Watch the markets Wednesday and Friday, and we will see you guys next Monday. Thanks, everybody.